Streaming in 4K today. Thanks for all of your help, your assistance getting it going. I think it was the upload speeds. Plugged it into the fiber, 3 gig speed, upload speed as well, and we are cooking today. Guys, today's a pretty big topic, and the title of today's session is Something Big is Coming. And it sounds kind of sensational. Is something big already happening? It sounds sensational in so much as that, as it sounds like in any moment, like, guys, it's all over your feed. I think everyone feels it. I know I feel it. My intuition says something big is coming. And listen, I have no crystal ball and I don't know what that is whatsoever. But I genuinely feel that we are on the cusp of something big unfolding. And the thing is, I don't know if it's good or bad. I honestly don't know if it's good or bad. I feel like I'm outside and everything is still and it's calm. And the reason so is because there's a storm out on the horizon. Now I don't know if that storm is gonna hit us dead on or if it's gonna pass us by. And if you ask me what I feel that is going to happen, when I say I feel, I don't mean like what like I mean what's my view? What's my assessment of what's taking place over here today? And for sure, there's nothing easy about it. But I do believe that we are in the process of being able to re-accelerate this bull market. We have conflicting signals all over the place. We got more today. Today we saw, obviously, job market continues to weaken, opening up the door potentially for Fed to cut in September. A lot of people wondering what's going to happen around the time of the cut. I love Chris's view. He thinks the first cut is actually going to send risk. He thinks that even the second cut is going to continue, that he gets worried around the third cut. I'm bringing that up because we're going to talk about that, not today, but definitely ahead. Today we're seeing, right? We're seeing PMI services expanding further, coming in hotter than expected. One of the things that we continue to watch, I continue to watch over here as far as what continues to improve, right? Now, the earnings cycle, which has been improving, we have to watch coming ahead. Why? Because if indeed the taxes, the tariffs are eating into corporate margins, are you going to start seeing their earnings and estimated earnings all of a sudden start going the wrong direction? That's not happening now, but we have to watch out for it. We want to watch out specifically what happens with Meta and Microsoft and their spending. That's a big deal. But we are seeing one thing that was, you can see PMIs, ISM, that's that's moving towards mixed and recovering, and they're starting to improve. That's good news. And then we're seeing the restrictive end over here as far as monetary policy potentially on the cusp of changing. Potentially on the cusp of it changing. And this is just like, this is the norm. A lot of things could happen outside the norm. Everyone's paying attention over here, what's going on, whether or not it's the European, the US, especially the Japanese bond market, saying, wow, the alarms are being sent. What's going on? Did you notice that as the escalation was beginning to occur in the Japanese and the European bond market, that the 10-year started actually going bid? That's interesting. That is that signal that if there is some type of turmoil, remember we believe the next crisis does not come from the U.S. but comes from either Europe or Japan. That's what that's the premise we've been going under. A lot of people looking for that crisis to ensue as it's been over the last couple of decades coming from the U.S. It looks like it's going to be out there on the margins this time. Um, we are looking at Friday, not tomorrow's non-farm payrolls being obviously a big deal to basically affirm or disaffirm what are the expectations of the cut coming into the market in September. But, and I caution that, and I point you towards the most important piece of data ahead is going to be next Tuesday on the 9th as we get the BSL revisions. Now I want to take a look over here today at what Fed Williams was saying. And he's saying, listen, we see slow interest rate cuts if the economy meets expectations, assuming that the data continues to soften over here, specifically on the job market. A lot of people wondering, hey, listen, if you're seeing in the US a lot of inverse immigration taking place, and you're seeing a lot of productivity increases with AI, and that's on like basically like low level entry jobs. They're not, people are not hiring, and they're using these tools to basically replace that labor. Maybe this is you don't know, but maybe it's actually what is needed for to keep this economy going over here, and that's providing less of a signal. Are dynamics changing? They are, or is it like, listen, the world is falling apart behind me, and I don't want to look at it, and I don't want to see it. Could be that as well. So you have to watch out for everything. He says that, listen, he gives no timetable. It seems to me that the Fed is not looking to embark upon a rapid uh, um, rate cutting cycle at this particular moment. Now, we don't know what the revisions are going to look like and whether or not that strengthens their case to actually keep them where they are, throw in like a 25 basis point cut, or if they're going to accelerate those cuts. Right now into the end of the year, the market is pricing in one cut with a potential of two. So that seems to be kind of where the Fed speakers are leading us, and we'll have to continue to watch and see what that happens. Could you imagine a world where actually the forced devaluation easing comes from, right? Comes from Europe. We have UK on the brink with as far as their bond market. We have France on the brink. What happens if it came from Europe and or Japan? Like, what are they going to do? Are a lot of people are saying like the Japanese bond market, like people are losing money and it's gone forever. It's never gone. But the Bank of Japan owns most of the bond market anyway. So they're I don't know how to reconcile all that. But what happens if the easing and devaluation doesn't come in lockstep? All of as far as Europe, Japan, U.S. What happens if it's coming from there? What would that do to the dollar? What would that do as far as foreign inflows back into the U.S. bond market and back into the U.S. stock market? What would it do as far as gold and Bitcoin? Quality looks great. OG would love this is leveling up over here at CTM. David, we got a fractal from 2025. I'm going to start this session off with Bitcoin, and just want to take a look at a couple of things with you all, including David. Then coming back to your comment over here, and we just have a nice, pretty trend line drawn here on this chart, and this green trend line is showing that ever since the hype phase, where you saw the massive acceleration of Bitcoin, topping out over here, ever since then, taking above that line, price for the last 13 years has traded above it. And we could see this accumulation channel. This accumulation channel led to the massive 2017 bull. What's interesting is that it held at resistance, except for what was the global lockdowns over here, and set off the second cycle. So is it possible to say or believe that this cycle actually started from an elevated place, right? Like just going off of this trend line. And the reason I'm hitting on trend line is because it's going to be important in 1 second as we look at the difference between what I believe is the adoption here on an S curve compared to thoughts of power law. And listen, at the end of the day, we'll get to that at the end, but it's important over here. And then you could see that we came back in this bear back into the pocket, right? We've never broken this line. Now we could break it. Obviously, we could break it at any point in time. By the way, if we break that, I would believe that is a major de-risk event. We'll look at that in 1 second as well. But right now, we continue to be in the pocket. And if we're able to break out of the pocket to the upside, then maybe this bear market started at the bot, like in the zone, I should say, rather than an elevated level. Could that be part of the reason why the last bull market had some, let's say, suppressed expectations? I don't know. Let's take a look at this and let's just pretend it's from here to here, and that's a trend line. And obviously, I don't want a trend line, and the picture's getting in the way, and 4K, and so you know, look at the difference had it started in the pocket. It's a that's a major difference. Could be, I don't know. Either which way, let's keep going. And then I also look at this over here and the difference here. This is a massive, massive 80% CAGR, a massive angle of ascent. No question about it. It's absolutely major. A lot of people focused in on the 21% CAGR over the last 4 years, but this is since 2 years now proven to 100. These continue to point towards long term, let's say 60%. 60% I like, 60% is the orange line. And I could say that, ever since 2017, for the last 8 years, that's the angle of ascent that we've held above. And I believe that Bitcoin becomes fairly valued anytime we come towards that line. Now, the importance of this line is just in case this is correct. That has drastic ramifications whether or not it's correct or not. By the way, there's also other ways to look at this. This is the invalidation. And if this were to break at any point in time, right now, $83,000 to close it below $83,000 sets up an invalidation. And that would be a major de-risk event. Like closing below and outside of the sustainable channel is a major de-risk event. Now, if it happens, we're just going to bring that awareness out there and say, listen, this is not right. If you have, like obscene risk out there, not obscene, but if you're borrowing against your Bitcoin, if you are out there on margin, listen, this shouldn't have happened. It's happening. You might want to use this as a place to reassess what you thought was going to happen. Now, others out there might be like, man, that's a 30% correction. I believe 30% corrections are pretty normal within bull market. I don't buy that 2026 bear, and I'm going to go ahead and do something crazy like borrow against my Bitcoin. I don't know. It's up to you, but I'll point out the important major technical areas, and that's something I would be paying attention to. And I think I could point this out in 1 second, but I'm not doing it right now. So anyway, that's a big deal. And speaking of these lines and over here, and if that were to happen, do you think that this line over here, which is probably a 50% CAGR, which is also, 50% if you go from one for the last 8 years, I was going to say, it's on average a 50% CAGR. And here you have 50% CAGR, but if you average all these up as well, you're coming towards like 50%, close to it, 50, 60. So is that something that might be in play? And that's just below 55,000. Bitcoin is cheap. By the way, there are people out there who are calling for some pretty wild things, and this is the Bitcoin commodity, the senior Mike McGlone, senior commodity strategist at Bloomberg, and he's saying that Bitcoin is about to lose a zero. $10,000 Bitcoin, that would be nothing new with the history of Bitcoin. That would be like, a lot of people would get hurt on it, but could happen. And the reason that he thinks this is mainly going to happen is because Trump is pro Bitcoin here. This is what he says. If you want to hear it, I'll play it for you. But he did say when Bitcoin was at 10,000 that he thought Bitcoin was going to $100,000. And he didn't think any major catalyst needed to happen to get it there. A lot of major catalysts happened to get it there, including the launch of the spot ETFs, the opening up of Bitcoin to Wall Street, the advent of the corporations entering into becoming Bitcoin treasury companies, and the stacking. Well, I don't know. So this is one thing to just ask right here, right now, to all of you. So it is different if Bitcoin were to have a is that a 90% correction, or is it more? So let's say Bitcoin goes down towards $10,000, a 91% correction. That would be different. What do you mean that would be different, Jordan? Bitcoin's corrected that much back during the hype phase. Well, that's the whole thing. That was during the hype phase when there wasn't much of a market. Like you could there was no Bitcoin trading on exchange, right? And yeah, it was massively different. And then it's gone through an 85% correction, an 84% correction, and then a 76% correction. So a 91% correction would be beyond different. It would be extremely if you consult Bitcoin's history, if you understand what's taking place over here. So that it could happen. It would be different. And if it did happen, and it is different, is it an awesome thing to buy Bitcoin at $10,000, or is something wrong? Would you not question if something's wrong if Bitcoin traded to $10,000? Now it could happen, and I remember just not too long ago in 2022, there were bearish calls for things like Bitcoin was going to trade under $10,000, and of course that didn't happen, but it traded down to 17, and of course there's a big difference between coming down to 17 compared to if it went back or down towards 10. I guess not much of a difference, 76 to 85, but big difference. And, you know, is a 90% correction sensational? And if it did happen, is that an awesome opportunity, or would people think differently about what they perceive to be I don't know if store of value is the correct word here. Strong investment. And, you know, a lot of people might think differently. And they might, if that happened and gold corrected 20%, they might say, you know what? I feel a lot more comfortable in the shiny rock. I don't know, but those are legitimate questions if that were to happen. I I I think that would be a big deal. So, um I don't know. I think something like, if anyway, let's see if that happens or not. I think if that Bitcoin were to go down to $10,000, something is extraordinarily wrong, and I don't know what that is, but I don't. That's not within my realm of possibility. Therefore, if it were to happen, I would question everything. And if you think that, think about what would be happening in the world for that to happen. I don't know what it would be. Um, so anyway, let's talk about trend lines on charts. And I was pointing out the 60% CAGR that we've been on since for the last 8 years. And then I pointed out the 90% trend line over here that's been here for the last 13 years. And of course it could break. It just hasn't yet. It really it hasn't yet. And if it did, that would be something different. I would pay attention to it if it did. Check this out. This is really cool in the ongoing conversation between power law and S-curve adoption. And I was going to bring up a chart before we get into that so I could really, and let me remove the two lines. Oh, I guess there's 3 or 4. So my hypothesis is that what happens is that as Bitcoin has entered this stage of adoption, the early majority, that actually the adoption continues to accelerate, the devaluation of the underlying continues to accelerate, and instead of Bitcoin going off like log scale regression, you're going to see, or even like this or something like that. And I'm talking about between now and the end of the decade. I'm not talking about between 2030 and 2035. I'm looking between what happens over the next 5 years. And my hypothesis is that Bitcoin is actually going to continue walking up and enter towards the top end of the deviations of what the coming from the earlier. I'm looking for a good chart of that over here. So the top deviations would be along the lines up over here, right? Into the end of the decade, I should say, over there. Now, let's check this out. Before we do, let me put those lines back on my chart because I like them. They're there for a reason. I'll come back to that. Let's come back to this already. And I think this is really cool. And this is someone who really embraces the power law, which is awesome. You could, power law, it's right now it's on tap. And check this out. The whole hypothesis here about why Bitcoin is following the power law, and I'm gonna in his own words explain it to you. Someone who's devoted his life to Bitcoin, to the power law and markets, and they're saying stocks do grow exponential. Stocks grow exponential. And he points to things like uh, you know uh, the advancement in technology, to the advancement in healthcare, and he draws the lines on the chart, and he's pointing to stocks growing exponentially. And look at the CAGRs that he believes they're growing out, right? Quite profound. But check this out. I want you to focus on this part right over here, and we're going to come back to that after I play what he says. So here we go. We're gonna listen together.
Trends. Now, they are absolutely countered from the fiat madness of the money printing. But we have to sort of parse through these things. But here's how it relates to Bitcoin. Okay, so this is kind of the one of the things that I was trying to show is, notice, Marty, all of these trend lines, right? You see that they're straight lines, right? They're
straight lines.
Increasingly faster growing straight lines on log scale. So they are exponential, and they are in fact what he calls super exponential in this book. This is, I think, is a very good graphical representation of super exponential trends. But then if we look at Bitcoin, oops, go the price. Let's go the trend. Here's our old power trend, our friend. We do not have a straight line. We just do not have a straight line on log scale. And if you...
Okay. We do not have a straight line on log scale is the argument. The argument is clearly we do not have a straight line on log scale. And I'm going to say that's a straight line on log scale. Now the difference is that he is calculating for the hype phase. Now check this out over here. What is this? What happened right over here? This was the birth of the Federal Reserve, right? So forget all of this. I'm starting right over here, and you can see clearly the hype phase in action, right? And notice that the hype phase also has the massive destruction. We just looked at Bitcoin's 93% correction, 95% correction. Same thing happening here as the Federal Reserve caused the Great Depression. Ben Bernanke, right? Was it 2002? He's like, listen, I'm sorry. We did do it. We did cause the Great Depression. Don't worry, we won't do it again. And how did they cause it, right? There was massive speculation taking place throughout the Roaring 20s. And the Federal Reserve, because of that, they tightened monetary policy really tight. And it caused credit to not be available. And it caused bank failures. And instead of being the lender of last resort, which is supposedly why they were created in the first place, they just stood aside, let things get worse. You saw money supply come off by 2/3, and they caused the crash by not being there to provide liquidity. Now, there's speculation the reason they did all that was to consolidate the banking system further, and the people that actually, the bankers who started the Federal Reserve, were able to consolidate their power, and that it was exactly what they wanted to do. Nevertheless, this is what happened. And if you look at this from the view of Federal Reserve just born, creating that speculative frenzy, and then the massive destruction of the hype phase, and then from here, you have trend lines on a chart, which is the same thing as that's occurring over here. So look, someone who is looking at Bitcoin from the lens of, I believe what's happening is power law, and that's who I want to follow. I want to see people who have opposing opinions, because I want to know whether I'm wrong or whether I'm right. Now, and there's no like deciding factor just from that bit of information, but that's something for me that actually points more towards, actually, this does suggest power laws sorry, this does suggest S-curve adoption. It is just a trend line on a chart, and it's just straight trend line on a chart. And I think that the confusion is what took place in the hype phase. Interesting that that is taking place there on the equity markets as well. And again, right or wrong, that remains to be seen, but it's something that actually says to me, you know what? I think that, and forget, I have to sometimes, for new people, hide the prices on the right. The price on the right is doesn't even matter. I'm trying to illustrate what I believe could be a potential path of price, and that is different than that 4-year cycle behavior that people are expecting. Power law looks different, so power law is the closest thing to being correct. The problem with power law, from my view, is that it's going to break to the upside, and also that the floor might be too low, because the floor changes as you go out further. And you could see that, into, here's the difference. As you move into 2030, the floor is 176. So if someone thinks that the power law is overextended as we get later into the decade, which it may be, and I expect it's going to be towards the ceiling of the power law and or break it. But if you distribute Bitcoin looking to be able to buy Bitcoin back down lower towards the floor, but the floor is actually a straight line, is actually exponential growth. That's where people could get left out. Similar situation to setting up over here. If the 4-year cycle does not take place, it opens up the opportunity for people to actually distribute Bitcoin. Now, they might get the chance to do it at higher prices, 170,000, 140,000, 210,000, or they might not. They might think that, well, here's the window. We just never, just like last cycle, extremely suppressed, a lot more of the same taking place, and people distributing their Bitcoin, hoping to buy it back lower. They might have a smaller window than anticipated. And that window suggests that as Bitcoin's $111,000, it could be to the summer of 2027. Or worse, if this straight line on a chart is correct, and yeah, I don't know for how much longer it will be, you know, but it is right now. It hasn't. Then you're looking at by the summer of 2026, giving you the last opportunity potentially to get that Bitcoin. Again, this is what I believe is going to happen, and a lot could change very quickly in November if price is rising. December, if people are looking at the markets and they're like, you know what, we're not headed towards recession. Fed is actually beginning to ease, and we continue to see signs of reacceleration. Markets are mispriced. You might see a lot of really favorable catch-up price behavior in Bitcoin, and we might see into that November and December window some really strong upside price action. I don't think that we're going to blow off to the top. I think what's going to happen is this is the next steps of what we're ahead. And then when we move over here, I'm not like, let's see if I get that right. That's 1, and that's 2 points to get right a year in advance. If that winds up being correct, yes, my next assessment is that what happens is this, and that will be another glaring difference of what we've seen in the past. Guys, I want to talk briefly about MicroStrategy, as a lot of people are wondering, first of all, what's going on. Is it going to be included in the S&P 500, and maybe also with the price? Yeah, so a lot of people are kind of wondering what's going on. Like if you're not a big Bitcoin maxi, and so I ask you, like why are you a Bitcoin maxi? You ready? And are you a Bitcoin maxi, well, I don't like the word Bitcoin maxi. Bitcoin maxi is actually a derogatory term that was coined, that was born through Vitalik. And I like Bitcoiner. I'm not a maxi. I'm a Bitcoiner, right? And you know, who is a maxi? Are maxis Bitcoiners who, like, there is no second best? I'm a Bitcoiner. Forget everything. Oh, but I'll invest in corporate treasuries, and that's okay. And I tried investing in altcoins. I just wasn't good at it. So therefore I'm a maxi. And, like, don't trade your Bitcoin because you can't outperform Bitcoin. So I'm a maxi. Like, what is a maxi to you? And I think maxi is Bitcoiner. I'm a Bitcoiner. And I've done my best to get as many people as possible to understand the bullish case for Bitcoin. And the reason I'm a Bitcoiner is because I see the continued adoption and I see the continued devaluation. Now, are you a Bitcoiner? I'm I could also say I am a Bitcoiner because I believe it's fair and just. I think that one of the greatest evils in the world is actually the central banking system and the dollar debt based system. I think the fiat system is one of the greatest evils in the world and one of the root causes of evil in the world. And I think Bitcoin is fair and just. So I'm a Bitcoiner. That's why I became a Bitcoiner. I don't think if I never understood the value of hard money and gold in the past that I ever would have been able to become a Bitcoiner. And I don't think if I ever understood the injustice of the central banking system, the fiat based system, that I also would have became a Bitcoiner. But as it happened, that's my background, right? Like, that's I understood the evils of the central banking system. I understood the value of hard money. So Bitcoin was just, it made sense. So that's why I'm a Bitcoiner. It's fair and just, and I believe in its ability to continue to outpace the rate of the devaluation of the underlying, let's say. Now, are some people Bitcoiners because of other reasons? For sure, that's great. Those are my reasons. And guess what? It's an open protocol. Not everyone has to have the same alignment to use it. You don't need that, actually. So whether or not, I believe that, and maxis became maxis because they tried alternative investments and weren't able to do it. That's stupid. That's retarded. Who's to say because you couldn't do something that someone else can't? I don't embrace that whatsoever. I'm fully against the whole maxi mentality. By the way, many of those maxis have been distributing Bitcoin above $100,000, and many of those maxis have also been buying gold. So try to reconcile that. Um, so Thomas, Bitcoin, and what about the quant? So some people are in Bitcoin for the money. And some people think that it's a good investment to make. And some people think that, you know what, you can't get a 30% CAGR anywhere else. I'm going to invest in Bitcoin. And, you know, if you're in it for the money or a 30% CAGR, CTM and our maneuvering of the markets outperforms a Bitcoin 30% CAGR by a wide margin. And that's what we need to do. A lot of people can't reconcile right now why I could say, I believe that what we're looking at is the market is going to be able to reaccelerate. And they're like, well, you just went 100% into cash. How does that make any sense? CTM, we follow momentum. By the way, FNGU getting ready to kick off a buy entry, taking us off of that 50% cash. Definitely favorable after the Google ruling of it not being a monopoly. Looks like it's been consolidating nicely. Would love to see it. Now, is that going to come off of what's going to be the reason behind it? Is it going to be because the jobs comes in poor? And by the way, the history on FNGU has just reestablished itself as the ticker change happened. It's our best performer out of all of our models, and we got some incredible this is our worst performer. Can you imagine 2020 till today. Our worst performer by far, and our best performer by far. And then we have everything in between. Listen, we could go from, as we just were beginning of July, 95% into positions across Bitcoin, crypto, and stocks. The only thing that was not in was Tesla, into 100% cash very quickly. And you know what? It feels good being 100% cash throughout this seasonals. Now, I expect personally that there's a good chance we get chopped up. That's my. I don't think any longs are going to go anywhere. I think we could wind up getting chopped up, even if we have maybe some shorts open up on crypto. Maybe they also get chopped up. That's my mental state coming through the end of October. Doesn't mean it'll happen, and that's the beauty of it. If the market momentum kicks one way, we're going to start piling in positions to it, and we'll ride it wherever it goes. This is the advantage of CTM, is that we just trade momentum, and we do it with a mechanical edge that allows us to know when to be in the market, when out, and on what side. So, strategy, and a lot of people looking for potentially it to be included into the S&P 500. Listen, I don't think that's going to happen, first of all. And I think it's a good thing it doesn't happen initially. Now, if my whole theory is correct, and that Bitcoin is actually at a stage of adoption where it's going to experience much subdued downside volatility, then it likely should be included. Well, maybe not even MicroStrategy. MicroStrategy is highly levered, right? So when you look at MicroStrategy versus Bitcoin, like let's forget this recent dump of MicroStrategy, and we come down over here to 2024. I'm trying to line them up at the same. Well, here, this is a pretty big correction on MicroStrategy. All right, I'm starting high, but a 37% correction on MicroStrategy. By the way, that's not even a big deal, right? If we look at what MicroStrategy has done, not in the bear market, in the bull market, 45% correction, 56%. I don't think that it's a good idea to have such a levered instrument inside the S&P 500. I don't think it's a good idea. Now, would something like, and obviously it's not, but like a Bitcoin ETF, and like, okay, I expect drawdowns to be 30 to 40% during a bear market. 50, obviously we put the window between worst of the worst happening up to 60%. I think that makes a lot more sense. But if Bitcoin corrects 60% and MicroStrategy is correcting 80%, I don't think that's a good fit for the S&P 500. I sincerely don't. And I don't know that it's a great idea that Saylor is able to get another X amount of billions of dollars to be able to go. I don't know it's a good idea that MicroStrategy owns 3% of the Bitcoin supply or more, or anything like that. Listen, I think that the people that make these decisions are going to be a little weary of the volatility that's included in MicroStrategy. And I think for good reason, they should not be included. That's my own opinion. Now, that's my opinion. Now, the odds of them being included is probably very low. Like maybe out in the future, maybe 2027, 2028, or who knows when as the market matures. But right now, for this upcoming deadline, I would think it's a very, very low probability that they're going to get included. Those are my thoughts. Those are my thoughts. I don't know what strategy is going to do, or if they're able to. I just don't know. Here's the thing. It's a lot nicer. Like Saylor can't pivot. Saylor went ahead and just launched all these elegant financial engineered instruments in order to stack more Bitcoin, and no doubt Bitcoin, MicroStrategy shareholders, own more Bitcoin now than they did a year ago, even with all the shares diluted, but they own more Bitcoin. And in the long run, that should pay off. I believe that will pay off, except it's the long run and you're dealing with a highly volatile instrument to the upside and to the downside. And for us, it doesn't matter. Sailor can't pivot. Sailor has to hodl. And that means if there's another bear market and it's bigger than Jordan expects, it's going to be quite severe to the downside. But Sailor will hold through it as he did the last and, playing the long game. But for us, we just know when to be in the market and when out. And I have to tell you, coming off of this pattern, I thought strategy was going to launch. Instead, we took a small gain, a break even. But we've been out of the market here, 417, as prices coming off, and that's everything. Knowing when to be in the market, when out, and on what side. Now, listen, am I all for MicroStrategy? No, I've always had my concerns, I should say. I think it's a great instrument to trade. I think it's going to continue to be great. I've liked the fact that they've been taking a lot of corn from Bitcoin maxis who want to distribute above 100K and a massive amount of corn, right? Eventually, that corn is going to be moved. And I believe that MicroStrategy is a stronger hand who's looking to hold for the long term, or whenever. Michael Saylor says that even when he dies, he's never selling. He doesn't get to make that decision when he dies. They have a board, and the board will decide. And I hope that for the foreseeable future, like for a decade, like MicroStrategy has no plans on selling, and maybe the market matures to a point where they have no business selling, right? Whatever they evolve into, they would know there would be no need for them to do that. And I like that again. I like seeing those maxi hands who are selling their Bitcoin for gold and other things. They people tell you, oh, lifestyle chips are good, 100%. I'm all about making money in the markets to do whatever you want with it. But a lot of those Bitcoin maxis who are distributing, they're not buying billion-dollar mansions. They're buying gold. And that's just the situation. Um yeah, that's one thing, right? His own personal stack. That's a great point. And then when he says he's never selling, obviously, that doesn't include the MicroStrategy shares because he sold a bunch last year. He sold so many, it's ridiculous. So he wants you not to sell. He's selling. But anyway, again, we could look at things objectively. Like, I think it's a good thing. Anyway, here we are today. That's my view on MicroStrategy. I liked our look at Bitcoin today. Markets here are coming into non-farm payroll tomorrow, expecting some poor data so that they could get the cut they want. Market really wants that cut right now, no doubt about it. Fed is posturing, whereas you know what? It looks like only one cut is coming into the end of the year. Everything that matters is going to be Tuesday's job data revisions by the BLS. That's going to really give us the clarity that we want to see coming into the September meeting, and likely beyond that, right? If it's weak, that sets up probably more than one cut into the end of the year. If it's strong, maybe we don't even get that cut. I don't know. It's too hard to say. Um, anyway, everyone, have a beautiful day. CTM, thanks for being here. We continue at it tomorrow. It's Fun Friday, but I don't think it's going to be so fun. I think we're going to be putting the work in. We have the data point tomorrow of non-farm payroll to consult. I want to get into the overall um, accelerating debt problem and the ramifications of what is going to happen next. And has anyone noticed the increasing. Remember Janet Yellen. Granted, she's no longer the Treasury Secretary, but she told us 6 months ago, right, 9 months ago, that the U.S. Treasury, like they're gonna like their buybacks are gonna be winding down. They're gonna be there quarterly. We're seeing an increase of Treasury buybacks. Is that like setting up the coming yield control curve? Is that yield control curve just coming out of the U.S. or is it coming out of soon to be Europe? What it means for the markets, what the risks are, everything. We're gonna talk about it all right now. Have a beautiful day, everyone. Could we build in a price for the Fed cut in 2 weeks? No. Market. See. Oh, by the way, what did I want? I don't know why I was looking at this chart. I was looking at this chart earlier, and I wonder what people were thinking coming into. Why is this? Hold on. I don't know what's going on. Oh, here we go. Maybe I've been in the daily. I wonder what people were thinking. Doesn't that look similar to where we are now? 20% correction. Markets coming out, roaring up. I wonder, I know Paul Tudor Jones was bearish at the top. Paul Tudor Jones, this is where he made his money, made his fame. He was very bearish up here at the top and capitalized off it. But man, I I wonder what the market overall sentiment was. And I imagine it was quite bullish, right? I don't think it's bullish today. I think that I know there are some outliers like myself who think that they're going to be able to reaccelerate and extend this. A lot of people, it's hard to say because most feeds are just doom and gloom and bearish, and they've been that way for the last 2.5 years. And the last 2.5 years has been risk running up only. But if you look at a lot of these macro channels during that time, they are just every day the whole time so bearish. And but right now I've seen an uptick in bearish takes and putting a window on it. Like this is gonna happen in September, October. That could be 4-year cycle mentality, but people are not talking 4-year cycle. They're talking unwinded the carry trade and they're talking imminent collapse and a lot of that stuff, you know. Like guys, first of all, simple trend line. Here's one simple trend line, right? You got to stay on the right side. Here's a more aggressive take. By the way, let's say this is too aggressive for me. Is this a better take right over there of when something is wrong? It's not that it's this similar. We have over here, this green line would be the first breakdown. Only if that were to happen, that wouldn't be that unreasonable, let's say. I do expect that there's a good probability, especially during these next 2 months of weak seasonalities, that we could test the coming breakout. And history suggests that you don't stop just above it. It happens roughly, I don't know, I'll call it 15% of the time that you would test under it, right? All of that seems reasonable. This would be the first breakdown that you have to, like an early warning sign is what's a bigger breakdown? Is this the trend line? That's already a massive breakdown, right? What's the drawdown over here? It's at 20%. Yeah, bear market, entering into bear market, 20% is a long time to be off sides. It's a good thing that we've gone 100% into cash. And guess what? That changes tomorrow if FNGU kicks off. Everyone, have a beautiful day. Thanks for being here, CTM. Big shout out, Silent Majority, all of the replay crew. Have a beautiful day, everyone. 4K. I'll see you all on the inside.